Hello, 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 and welcome to yet another Marketwatch stream with Team Safehouse. My name is Paul. Welcome to yet another Wednesday. It's been a pretty decent week so far. Yeah, thanks for joining us today. We are about 12 minutes to pre-New York. And yeah, let's just get some of the usual household stuff out of the way. Please note that all information on this stream is for educational purposes only and does not constitute financial advice. No major blockbuster data released today. We have FOMC minutes coming out later at 2 p.m. Eastern, and news reports have it that Trump will be speaking at the FIA with regards to Ukraine, right? So that was primarily yesterday. However, as U.S. equities continue to push up, right? The ongoing narrative going into this week essentially is that traders are shrugging off tariff threats. Now, that is not withstanding that Trump has also recently mentioned that he plans to float a 25% tariff on all imports on cars, semiconductors, and pharmaceuticals, right? This would have tremendous impact on the auto sales in the US, of which I think the figures were roughly about 8 million imported light passenger vehicles and light trucks. Accounted for about 50% of US vehicle sales, right? He also mentioned that he plans to implement this or kick this into effect in April this year, right? So it's still a little bit far out. Don't forget, Canada and Mexico tariffs have been pushed back to sometime in March. Tariffs on China are still active. And of course, everyone's waiting on the reciprocal, reciprocal tariffs, right? Which is tariffs on everyone that taxes U.S. imports in their countries. So, yeah, interesting times. And primarily for me, like while we do go across, my bread and butter is, of course, always euro dollar. Let's just have a quick look here. So today's, given that we're not going to be waiting for any major data release coming out in pre-New York, so today's stream will be a little bit different. Today, I'll walk you guys through, take you guys along for the ride while I set up for the New York session with the members later. So yeah, if you want to trade alongside other independent traders as well as the Safehouse team, do give the Safehouse Access Pass a shot. Normally, it's at $8 a month. And for $8 a month, you get, shared our traders sharing their trade ideas. You get to trade alongside other independent traders in a trading pod, and ultimately locking gains together as a team, right? I could go on for 3 hours about the benefits of trading as a team, but probably for another day, not today. Yeah. So yeah, if that interests you, right now we've got the free trial. So it's a 3-day free trial, just so that you can come in, say hello, get to know some of the guys, and see if it's something you vibe with. So yeah, claim your free trial in link is in the description below if that interests you. One of the cool things we just released for the members is I took a couple of days to, well, I didn't take a couple of days, but like over the weekend I put together a playbook for the members, and this is something I've been planning to do for quite some time, which is coming from especially speaking with a lot of our institutional trader friends. It's nothing out of the ordinary, but whenever I talk to other retail traders about this, it's always quite shocking. One of the key things about institutional trading is that it's a requirement for you to be able to pen down your trading strategy, right? And if you aren't, essentially the idea is if you aren't able to pen it down, then you don't have clarity over your own setups, right? So this is something that we've been sharing with our members for quite some time now, and I figured, hey, why not lead by example and show them how we do it. So yeah, I've put together the 3 setups: Orbo, which is essentially OR breakout, Emax, which is EMA crossover, and as well as RDIV, right, which is RSI divergence. These are not secret strategies. Like any strategy, they don't work 100% of the time, but as long as they work more than 50% of the time, and I'll keep my losses tight, then yeah, that's how you make it profitable, right? So yeah, that was quite fun to do. So for the members joining us, be sure to check that out under the resources. If you want to check it out yourself, just grab that free Safehouse access pass and then jump straight into resources and download it for free. Yeah, I think it's quite interesting. I had a conversation with one of our traders, and it's like, why are you giving this away for free, dude? Like, you should charge for it. And I disagree. I think it should be free because I think, well, first and foremost, I think anyone coming into the industry of trading and is constantly on the lookout for, like, I want a trading system that's 100% guaranteed, doesn't lose money, doesn't belong in the trading industry, right? Because fundamentally, trading is about taking risk. Again, all information on this stream is for educational purposes, but it's something I truly feel strongly about, right? Which is, if you're looking to jump into trading and take absolutely zero risk, then I think it's the wrong industry for you. With every position you take, you have a stop loss and you have a take profit, right? And that's how the game works. No one I know, even in the institutional setting, like, no one I know goes 100% without any losses, right? So it's quite interesting, this conversation I had, because I was essentially telling the person, like, what is the job of a trader, and the job of the trader is essentially keep your losses tight and your profits bigger. As long as your profits are bigger than your losses, you'll be fine, right? And so yeah, I just had to get it off my chest, because it was quite an exciting conversation as of late. Anyway, let's just get back into the what do you call that? Let's just get back into the charts. So yeah, my mainstay is euro dollar. So this is one of the ones that I've been looking out for. Did I mention about what's coming out today? So FOMC minutes is quite interesting. I did a post on X recently. We had CPI, we had PPI, we had unemployment claims. Let me just recap that real quick for y'alls. Just gave you a boost on X. Oh wow. Let me go, like, one of our traders just boosted the stream on X. Thank you. Appreciate it. Appreciate Neil. Well, if you guys don't follow Neil on X, you should. He's just started. I mean, he's been trading for quite some time now. But he just started his like pushing his X account. I'm really excited for it. So do give him a follow if you're over there. Yeah. So anyway, yeah, CPI. So what happened recently, right? CPI came out hot. So we all, I think it was a previous stream, the one that I got knocked out. Well, not really knocked out. Like I made enough for the night, so I called it a day early. So that was really good. So CPI came out hotter. PPI came out hotter. PPI had a very different reaction. Unemployment claim, came out thereabouts 4% lower. And of course, the thing at the time on everyone's minds, was Trump's reciprocal tariffs, right? So following these data points, right, with unemployment claims coming in slightly lower, CPI and PPI hotter, right? Now, of course, the big question is the Fed gonna, continue making cuts, right? The key point is this: like, with CPI and PPI hotter, it is effectively likely that the Fed would hold, right? And supporting that argument is because unemployment, is holding steady and is still at historical record lows, right? Unless unemployment starts to pick up, right? I think the Fed still wants to see, progress in terms of inflation coming down to their target at 2%. So that's generally the idea. Market participants are pricing in at best one cut this year at this point, given how hot it's been. So yeah, I think the FOMC minutes, while many people wouldn't, bother reading into it, I think it's worth a read, to be honest. So if you have some time, I would suggest looking into it. Otherwise, you can come into the Discord, I'll read it and then give you my thoughts on it. Or you can, subscribe to Bloomberg or Marketwatch or one of those, and or Forbes or whichever you fancy, and have a look at the analysis that they put out there. But yeah, whichever you fancy. I think the direction is something that I'll be looking out for, because right now the Fed is in a holding pattern, right? And so are we going to be holding for longer, or are we going to start looking at cutting rates, given that potentially we would have more inflationary policies kicking in? Of course, I'm sure you've heard on multiple news channels that tariffs are inherently inflationary, but yeah, that inflation doesn't kick in the very second that they implement it, right? You see whips in the market because that's market reaction to the news, right? So anyway, without further digressing, let's just get into it. So yeah, euro dollar, these are the two levels that I've been working with. This was resistance previously, we whipped right up, right? So European stocks have been, or rather the Eurozone has been looking pretty solid as of late. I think this is just because, things are cheaper. Yeah, and then 104.92 half, which is this resistance line here. As you can see, price pushed up, back tested, seemed to have strength, didn't make a higher high, kept making lower highs, traded lower, just right under bulls, pushed it back up, and then same story again, and then since has fallen into a downward spiral, right? I wouldn't say it's a crash, but it's just, a downtrend like this, right? So you can see this channel right here. As of now, as we are speaking, 104.28 low, right? 104.28 low, we saw some semblance of a, well, if I zoom in right here for you, you can see some semblance of a double bottom, right? Of course, this was very quickly corrected back in right now to retest 104.28 low, right? So this is a pretty decent area. Would I long now? Not necessarily. I think I want to see some strength for the Eurozone before jumping into it. But EMAs are looking to, or rather they're looking like they want to flip. For a better feel of it, this is what we're dealing with, right? On the 15-minute, that was the 5-minute, sorry. On the 15-minute, we have the EMAs in a downward trajectory, of course, right? And right now we have just rejected out the 21 on the 15-minute, right? So what's the real question? Well, the real question is, can 104.28 hold? If it can't, then potentially we can look for lower. What would be interesting in this respect, let me just remove these trend lines because I think everyone should be able to see that. What would be interesting is if a potential RSI divergence, right? So this is part and parcel of how that playbook works in action, right? So okay, let's start. So we have a sustained push to the downside here, testing 104.28, and we've made a low, right? And this low dinged the 20 on the RSI, you can see over here, right? And so what would be really interesting for me is if this starts to do something like this and then makes a lower low, right? But if it makes a lower low and makes a higher low on RSI, well, that suggests a loss in momentum on the bears, right? And if, say, that's the case, then we would have a RSI divergence set up right here, right? And of course, what I will be expecting is for price to dilly-dally within this range, like this, pop up and break once the bulls find some strength, right? Hopefully when this happens, you know, they reclaim 50, right, on the RSI, back test, and then make another push and hopefully clear this, right? Of course, then my entry will be somewhere around here, stop loss slightly under the trigger line, and then, you know, going for the upside move. So still very premature at this point, but yeah, this is just an example of, you know, how I set up for a potential RSI divergence. Now, given that I've seen this, my next mental note, right, sometimes I write it down, put it onto notes on my iPhone, is or tell my team, right, is potential RSI divergence forming on euro dollar. So I, you know, use that as a reminder for myself to snap back to euro, just to make sure I keep an eye on it. 5 and 15 the dual time frames that I'm looking at, right? Primarily you want to see RSI divergence on both what do you call that, on both time frames. So I would like to see it on the 5 as well. So if I zoom it in right here for you, right, we have just skirted 20, RSI 20 on this one. Let me just pull this up so it's easier to see. Just skirted it, right? And so if you make a lower low and then it ends up somewhere around here, then, you know, that's in play, right? If it happens, it happens. If it doesn't happen, the market's not going to give it to you. Like it's fine, you know, you move on. You don't just trade with one setup, right? So yeah. Anyway, enough rambling. If you guys have any questions or, you know, want me to take a look at something, feel free to drop it in the chat, and I will do my best to keep an eye on it. So anyway, that's primarily what I'm looking for on euro dollar. We want to go to the hourly to see what's really going on. Well, we're trading within a range, right? We are in a range. So before we were on a straight line trajectory. Let me just zoom it out for you. Maybe I gotta go to the daily time frame because this is a longer term thing. There we are. Right, we were on a straight path to parity, which is what most traders were talking about, and then we broke out of that, right? And so that was this mark, 102.72 figure, right? Well, it's not figure, sorry, it's 102.72. Back tested it, and now we're just forming a range. So if the euro dollar goes sideways, right, because it's not like we made a higher high, you know, it's not trending in a given direction. But yeah, if we start ranging, then as you can see, you know, 104.92 and 102.72 are my bounds for the channel. And of course, you know, potentially we could see a rotation down back to 102.72. That is of course predicated on a weakening of the US dollar, or, you know, a strengthening of the euro, or both, right? So that's something I'm looking out for. Quite interestingly, I still think that we could potentially see, and this is a longer term thing, right? I think potentially we could see a parity play this year. But, you know, is it going to happen tomorrow? Is it going to happen next week? Nobody knows, right? We'll just take it one step at a day as it comes. So yeah, I think monitoring price action is a huge part of trading, and yeah, you know, patience is an important thing. Like, for example, all the people waiting for a reversal and a change in market structure as we, you know, approached parity since what, October of 2024, right? Have been waiting for this change in market structure, right? But right now, just on a daily time frame, yeah, you know, as you can see, I mean, it's clear as day, isn't it? Right? We are in a channel, right? So 104.28 that I mentioned earlier. Now that's just a very localized kind of that's a very localized level of support at this moment. But yeah, I think visually 102.72 and 104.92. You know, these are the two key levels I'm looking at. Yeah, I'm just keeping my left eye on news just in case. Yeah. Okay, moving on. Let's have a look at DXY. Oh dear, sorry for the mess. It is haven't been doing a lot of cleanup as of late, but yeah, as you can see, apart from, let me just turn it all off. Can't see anything. Yep. So since what, October 2024, DXY has been raging forward, right? And then broke the trend line, and as you can see, the EMAs crossed on the 23rd of January, which was 3 days after. Was it 3 days after Trump's inauguration? I think, if I'm not mistaken. Yep. And then we've recently on last Friday formed a lower low on the DXY, right? And so potentially, you know, this could, if we see a rotation to the downside on the DXY, like that would be quite interesting, because that would give the euro dollar that push that it needs to, you know, break out of this channel and move upwards. But yeah, you know, we'll see how that goes. But essentially, this is one of the things I do when I set up for the day. I want the high time frame and low time frame general direction of the market, at least at the back of my head, before I start getting into the nitty gritty of, you know, EMAs and Fibonacci retracements and all that good jazz. So yeah, you know, on the greenback, we have broken trend for on the daily time frame for a rally for the US dollar. We pushed up again, failed to make a higher high, quickly retraced back down, and right now has formed a lower low on the greenback, right? So we are in a downward trajectory at the moment for the DXY. Cool. All right, let's have a look at gold. Yeah, it's just up, man. You know, it's just been going up since March last year. It's just been, well, not really just March, but I think the real impulse started in March. But yeah, coming out of 2023, it's just been, you know, pushing up and making new highs. I think the big correction was here, as you can see, right? So at this point, I think a lot of people were thinking like, oh, you know, 2800 new record high, you know, it's gonna completely retrace, but clearly not. As of December last year, it's just been, you know, pushing up and up and up and up and up every day, right? Biggest correction was last Friday, right? Which was that route. Was I on stream? No, I was not on public stream. I was on station with the members on Discord, trading with the team. So yeah, that was really just the biggest one. This week it has been up, right? But we're back here again at 2940, right? We made a wee little bit higher. So if I zoom into this for you, right, so you can see just like what I was talking about earlier with the RSI divergence. Well, if you want to nitpick it, right, we have made a higher high, right? And so your trigger line would look something like this. It's quite ugly really, but sure, right? So it's a slight incline, but as you can see here, right, even if I just take it from here, like there seems to be a loss in momentum on the bull side, right? Like that. And then this is like that. Please ignore all those stuff. It's gonna take a millennium just to turn it all off. But yeah. So potentially we could have a bearish RSI divergence, which includes, you know, breaking and backtesting this trigger line, which lines up very nicely with the ongoing rally on the daily chart since the start of the year, right? So is it going to happen now? Is it going to happen tomorrow? I don't know, but we'll see. You know, we take it a day at a time. But just an interesting high time frame outlook. Going in onto the hourly, so we are still rallying for gold, which is what I've been trading as of late, just because, you know, geopolitical tensions have been picking up, especially with, you know, this quote-unquote trade war going on. That plus developments in the Middle East between Israel and Hamas, and of course, you know, the Ukraine war, as of yesterday, coming back onto the radar. So yeah. You know, with a lot of this kind of uncertainty starting to pile up, I think it is during times like this that I really enjoy, you know, the kind of volatility that there is on gold, which essentially creates ample trading opportunities, right? So yeah, on the what do you call that? On the hourly chart, I'm just going to zoom in right here for you. As you can see, we had another instance, and this is an example of false positives with any setups, right? Every setup has false positives. It's just how much, and tweaking your trading rules and adjusting the parameters, in order to help you curtail and mitigate the number of false positives that you get with your setup is key to profitability, right? So yeah, here's an example. There was a higher high on price, but then over here we had a loss in momentum, right? And so that was a pretty nifty downward push. So it broke this trend. Well, I can't really draw this trigger line really because it's a bit odd, but yeah, essentially it's showing a loss of momentum, right? But at the end of the day, even on the hourly chart, there was ample of support at 29.27, and that was coming right off the 21 EMA, right? So we're still in a very bullish trajectory, formed a new higher high, and of course now the question is, do the bulls, right, as of today, have enough to take out previous high 29.42? It's just a high I marked with my previous high level. And of course ripping off 29.32 as support, and that also was 21 EMA, right? So as you can see on the hourly chart, we are still within a very bullish trajectory. RSI is holding above 50, so that's good. Generally, when RSI is above 50, I look for buys, and when RSI is below 50, then I'm looking for sells, right? So until such point the divergences start to appear, and then that's a whole setup on its own. So yeah, the real question is, today, tomorrow, can gold overtake, reclaim 29.42, with strength, backtest, and push more, right? So of course that's the case. The flip side, if we reject off 29.42 and the bulls lose steam, and then potentially we can start to look at a reversal, and then we'll just trade it accordingly, right? Nothing too complicated really, but I think it's important to see things on the higher time frame. Now, zooming in, let's get down to the 15 minutes and see what's going on. So generally when I want to set up for the day, I look at the 15-minute chart, because I trade on the 2 and the 5. Yeah. Oh, hang on, I just got a text from one of our from Wei, our lead trader. Oh, okay, now he's just telling me he's getting ready as well. Just need to tell him that I'm on stream now, buddy. Okay, I'm not sure if he's watching. He better not be. Yeah, because he needs to be getting ready for New York, which is gonna be in just under an hour. I can't math. Hang on. Yeah, can you guys see the UTC? Oh, you can't. Okay. Well, oops. But yeah, it is a 8:47 Eastern right now. So whatever time zone it is, let me know in the chat, like where you guys are tuning in from. That would be kind of fun to know. But yeah, it's about 8:48 in New York right now. So 9:30 is New York open. That's when we ring the bell, right? Latest update is Trump says new 25% tariffs on autos, pharma, and what was the other one? Semiconductors are expected around April 2nd. So that will be an interesting date to look out for. But the good news is that Trump's tariff policy is starting to form, right, from what was when first launched against Canada and Mexico. From what was seemingly sporadic, now it's starting to shape up. And for those of you who are curious, why is Trump whacking tariffs and getting Musk and Doge to, you know, unearth expenditure from the government is because of the US, the sovereign debt issue in the US, right? Whereby I think was it 36 point something trillion government debt, and I think Elon Musk was in the White House briefing reporters saying that the interest repayment on these the interest repayment on bonds, right, is already more than military spending. So that's pretty wild, right? For those of you who don't know, who are unfamiliar with what bonds are, you know, essentially that's how the government borrows money, right? And so yield is, you know, the interest repayment that they have to make on it. So yeah. All right, so as you can see here, we've had the bulls producing some solid action. Unfortunately, right here I was getting ready for the stream, so I missed this long, but that's perfectly fine. We ripped up, right? So that was a pretty decent push, and then stalled, and now are correcting back down, right? So that's okay. You know, there will be plenty more trades like that. We have a local area of support, which was once resistance right around here. So I'm going to put it in the thinner one, right? And we've got VWAP right below. So that will be quite interesting to see if this holds. Now this is localized, so I'm not too bothered about it if it rips. But what's more important is that we've got VWAP below, right? So with VWAP below, let's see if this will hold, right? And then go for higher, right? So as a reminder, or for those of you who are just joining us, welcome to the Safehouse Marketwatch stream. On the higher time frame and on the 1 hour chart, as you can see, we've been rallying and rallying. I think no surprise there, especially for those of you who've been watching gold. But right now we are sideways in yet another range, and this range, just like, what was it? Was it euro? We were talking about the range earlier. Yeah, euro's range was 104.92 and 102.72. And that's on the Owenda chart. And of course for gold we are 29.42 and 28.86, right? So yeah, you know, that's the current range that I'm looking at. As you can see, you know, we've been trading in and out of it. We looked like we were going to break, you know, just rip right through, but this range was established after the CPI drop on, was it last week? I think it was last week, right? Let me check the calendar. Yeah, last Wednesday stream, we developed the CPI levels. So I am very, very fond of marking, and you know, you should give it a try too, if you find it interesting. But I like marking event levels, right? It's helped improve a lot of my setups. What do you call that? Yeah, over the past year or so. But yes, so CPI low, CPI high, that's band between 28.78 and 28.64 on gold. And as you can see, you know, after that quick push down and very swift buyback, you know, even on the hourly chart. So within the hour, right, we push back up, and yeah, you know, it's been rallying since, right? Of course, there was a solid correction, and as you can see here, I think there was a gap down here before. Sorry, this mess here is an RSI divergence example that I was using for the playbook. But yeah, right, as you can see here, CPI high 28.78 held really well as support, and since then we've been grinding sideways, but broke out of that mess and started to trade higher. This was as of Monday, end of Monday in the US, right? And yeah, you know, right now we've traded all the way up to the upper limit of the range at 29.42, marked by these two previous high levels, and just, you know, claiming levels as we claiming local levels as we go, right? So of course now we've rejected fairly off 29.42, right? As you can see, this, you can consider this a back test, and if we see lower, that would be quite interesting, right? Now, am I ready to short this? No. Why? Because ultimately, on the hourly, the EMAs are still positive, but the trajectory is very, very soft. Right? So I'll be very, very afraid to, well, not afraid, but like I'll be very cautious about hitting in longs. Because what do you call it? It seems like the bulls have lost a lot of steam. Now, confirmation for this looks like that. I want to see the EMAs flip. For those of you wondering, the EMAs are, my yellow one is 9 and the orange one is 21. And yeah, I want to see the EMAs cross like that, right? I want to see VWAP above it, and then I want to see a back test, and then that's when I go in, right? I will lose quite a fair bit of profit in waiting for this, right? But it is safer, and I don't mind making less, right? I just want to make sure I make, right? So anyway, that's just a thought. And depending on where that happens, you know, next available key level, it would be my target 1 and thereafter target 2, right? So what kind of retracement could we expect from a move like this? Well, I love trading ranges because naturally you already have a range rotation target. But I think it's important to understand that if you draw a long form Fibonacci, as you can see 2905, which for those on the member channel was I think, was it on Monday? When I was, yeah, when I was trading on Monday, I was talking about how 2905 held as resistance, which is what you see here. But 2905 right now is the golden pocket, right? Fibonacci 618 retracement, so that's a potential target. Now don't forget, above 618 you have the 0.5, which is the 50% mark. So 50% retracement, very, very possible. Yeah, I'm not too fussed about, you know, like, oh, you know, gold always hits 786 or gold always hits 718, I told you so. Like, that's not really my thing. What I've learned in my experience working in trading firms is I told you so is a waste of time. And what's more important is about ensuring that you keep your losses tight and you keep your profits larger, right? So yeah, I'm not fussed, but at least I've got levels to work with, right? I think the 786 in this case, 2893 is pretty decent because it held as support for price to push and claim 2905. So I quite like that. So I'll be watching out for that. I think because I tend to delete my Fibonacci pools, I will put one here just in case. So 2905 useful, 2910 useful, 2918 not so much. So that was from here. I'll take that out, right? This one at 2927 held, but that was primarily 21 EMA, so I'll take that out. Yeah, 2932 is in play at the moment. So for example, in this case, 2932 lines up with the 21 EMA, and unless the bears can claim this and backtest the strength, you know, there's really nothing to talk about in terms of you know, pushing down, right? If see, the 9 EMA right now is above VWAP, right? And if the bulls kick in with New York volatility, New York volume, sorry, and bring the 21 above, then that will count as an EMAX setup or EMA crossover. So in a nutshell, well, if you want to find out more about it, what EMAX is, you know, you can claim your free Safehouse access pass. Link is in the description below. Jump into the Discord. I mean, at least say hi, maybe, you know. And then jump to the resources tab and then just go and download. Then you will see like the 3 kinds of setups that I use and monitor on the daily, right? And try them out. Try it out for yourself. You know, if you don't want to try it out for yourself, you can use the playbook as a template, you know, for you to put together your own playbook, right, of your 3 most profitable setups over the past year or so. And you know, if you do that, it makes you a much sharper trader, right? Anyway, so yeah, you know, an Emax is essentially when the 9 and 21 EMA cross VWAP, right? And generally that tends to produce a lot of momentum. So like for instance, I think it was what over here, whereby well, this is a very ugly version of it, but yeah, if you can see here, this is when the 9 and the 21 crossed. Again, I didn't use this, but I'm just saying as an example. I'm trying to find another example for you. Something like this when you cross, and of course, you know, if it crosses VWAP, like it's even, oh dear, that's even better. Let me just put that back. Yeah. So yeah. Anyway. Yeah. Originally, the Emax was when the EMAs crossed over, right? But I like it very much more when it takes out VWAP, so that you have an additional indicator below to give you that level of defense and support for whichever direction you're moving in, right? So yeah, that'll be quite interesting. So yeah, if today, and this is on the hourly chart so far, if today we see the bulls claim 29.36 with strength, then that will be a really good push off the 21 EMA. And I would also love to see the 21 EMA probably on the lower time frame, you know, take out VWAP as well. So let's have a look at what that looks like. Let's go 15-minute, right? Where are my EMAs? Where did it go? There we are. Okay. Yeah. Where's my VWAP? There we are. Okay. Yep. So right now, as you can see here, on the lower time frame, the EMAs have already crossed to bearish, right? But the EMAs being flat like this is not something I want to get into, right? Because it could just whip sideways all the way, and you know, it will be one of those days whereby you just keep getting stopped out, right? So yeah, as you can see here, 29.32 held very steady as support, pushing back up, yeah, after this push down. And yeah, right now EMAs are flat, so I'm very not inclined to jump in and use it at the moment, because EMAs work really well when it's trending. But yeah, you know, as we said earlier, gold is within this range between the two previous highs, 29.42 and 28.86, and now we're on the upper side of that, right? So on the higher time frame, one could say that this is the stall and failure above range, push back down, found support at local level of support, back test, right? And if we claim this, then it's more downside. So this would be the case I'll be looking for more downside, right? And of course, if we, you know, if VWAP holds, EMAs cross again, start showing upward trajectory, and you know, gets enough bullish volume to take out 29.42, reclaim 29.36, then yeah, sure, more upside. You know, today, tomorrow we'll see a new record high, right? But otherwise, you know, potentially what's in store is that we could potentially see a range rotation from 29.42 to 28.86 if the bulls lose steam, right? So that is primarily what I'll be looking out for during today's trading session. And yeah, you know, things are pretty slow at the moment for pre-New York, just because like pre-New York only gets exciting whenever, you know, there are news releases. When there aren't any major news releases, then it generally gets very quiet. Are there any new news releases today? Well, the members are already prepped, because every day we update the data calendar. So yeah, so that our members can, you know, see quick fire analysis and, you know, and see the entire schedule of key data releases in the US. And of course, you know, use that as a source of reference, you know, to ask questions in terms of like, oh my God, what does this mean? You know, CPI came out 0.4% month on month. Like, what does that mean? You know? So yeah, those are some of the things that we go through in the community for the traders, just so that, you know, they get some context to what they're trading at least. But yeah, right. So now the question is, range rotation or a new record high? Now let's have a look, right? But yeah, right now it's decently quiet, not a lot of action. So really, I don't like to creep around. I mean, London was good, Asia was very good, right? But yeah, rolling into New York. This is, I think, just coming off what do you call it, London lunchtime, I think. I don't know. If you guys are in the UK, please let me know if it's lunchtime. Yeah, so that's essentially the market call, right? You know, can we hold VWAP, reclaim 29.36 with strength, flip the damn EMAs and make a push to try and take out 29.42? That's to the upside. Otherwise, right, we claim 29.32, backtest and push to the downside, right? Because right now it's just sideways, really. So yeah, let's see how that goes. But right now within range, local range, and yeah, the higher time frame range is between previous high 29.42 and 28.86. Cool. All right. Any questions on gold? If not, we will move on. SPX. Wow, S&P 500. So the last one of the previous things I drew was, this was annoying, so I drew it. This was a triangle with the ORs below, and then, you know, back test and no look back is rallied quite a fair bit. This is what I meant earlier by, you know, traders just shrugging off like tariff threats, right? Just kept pushing forward. We've had a couple of major corrections as of late, but then primarily, you know, it's still pushing up. I think interestingly enough was this level at 61.27 that I drew. And I drew that as a double overlap, but I kept the triangle here. I was about to delete it, but I kept it for the stream today just because I wanted to show you guys that, you know, this is something I've been watching since last week, aka, you know, as you can see, this level of resistance here that has been holding going into this week. Monday was President's Day, so there was no New York volume, so it just held and held and held and held, right? And of course, in the early mornings of or late night New York session, then we had that push up, breakout, back test, push up again, failure as it stalled, and then fell right through. This of course was in yesterday's Asia and London session, and then New York Open, right? That was when there was the whip down, and then this was the interesting one. So I drew the RSI divergence, bearish RSI divergence here, which is a slight higher high, but then a loss in momentum on RSI for you guys. I'm not a big fan of it, but you know, it did form, but there was no look back, right? It was just a steady wham bam all the way down. So this is what I call route, right? Anyway, and then we have yesterday's trading session whereby we, you know, made a low. So we made a low, and then we made another low, right? And of course, this is the trigger line. Now the trigger line is not that pretty. There's no hard and fast rule about it. It's whatever you feel works, right? Some people want to take from up here, the highs here. I see these as anomalies, which is why you notice I draw mine here. Well, to be perfectly accurate, it should look like this, right? So these are anomalies whereby it quickly went up and came back down. So I take the average position, something like this, and of course then, you know, after the lower lows formed, right, we went sideways here for a bit, pushed up, back tested, and no look back, and all the way up, right? And of course now we stalled above previous highs 61.34, and then we drop back down. As you can see here, this is the scenario that I want to see. This is a VMAX, right? EMAX, sorry. Been messing around with my son and his Pokemon cards for a little bit too much, but yeah, you know, this is an EMAX crossover, right? This is an EMAX crossover. See how the 9 and 21 EMA just rip right through? Yeah, that's nice. Now here's the thing, doesn't mean that, you know, the EMAs carry through the VWAP means it's gonna fly off the roof. In fact, if anything at all, you know, you're looking for a stall, right? Unless there is a very, very sustained rally or route, then it will carry all the way through, right? But yeah, if the 9 and 21 EMA starts to narrow up, trajectory, as you can see here, let me zoom it in for you. If trajectory starts to look like this is good trajectory, more inclined is better because that shows acceleration. If the 9 is widening, so like widening away from the 21 like this, and they're both going up, you can see the distance between here and here is larger than here and here. This is called rapid acceleration, right? And if you have your EMAs in a rapid acceleration trajectory, then that's way more upside. But instead, in this case, as you can see, we started to taper off, and trajectory, you know, from this started to go to this, right? And so that shows stalling, right? So this was a fake out. This was stalling. Bulls came back, pushed it a little bit higher, try a little bit more. As you can see, we are narrowing here, and then finally we have the cross, the EMA cross. And then, you know, this looked like it was going across VWAP. One last push, and then we crossed, right? And even after we crossed, the bulls were decently fighting to keep it above, to turn it around. And then as more sell pressure started to kick in, this is when you see the widening, right? Can you see? From a narrow thing like that, it became this. Why? Because of this drop. Yeah. So that's how I have a look at EMAs, you know. And use that to support what's going on, or at least inform myself what's going on in the market. So yes, you know, S&P, that's what's been happening. We essentially stalled around here, above previous high 61.34. Oh yes, the interesting thing was this. Let me just pull this up. Hope you guys are finding it useful. If you found this useful, please don't forget to drop a like, comment if you have questions, subscribe for more. Essentially every Wednesday I try to come and do a public stream, just, you know, for those of you on YouTube or X who want to see what we do and the kind of vibes that you get when you if you do consider joining the Safehouse Access Pass and our community, our growing community of independent traders. In session trading is exclusively on Discord for the members, and I believe they should be getting ready. It is 19 minutes to New York Open, so yeah, they should be getting ready for today's trading pod session. So if you want to join that, then yeah, you know, get your free pass and come and say hi, you know. Anyway, what I was saying, right, was this. So can you see that although this happened twice, right? We have our bullish RSI divergence here because we made a lower low, yes, right? As you can see here, I'm just gonna hover over it so there isn't this stupid zoom in control, but we crossed 20 under, right? And then we made another low, and that's technically a higher low, yeah, on RSI, right? Of course, if you zoom into the 2 minute, there's probably a little back test. This would have been like this as an RSI. It whipped up, cool, held, and this is what I love about bullish RSI divergence, right? When you have a strong push, this is not common. Commonly, it would be, you know, push, back test, and then a secondary push. But this was a strong push up, back tested 61.27 once, back tested 61.27 twice, pushed up, even made a higher high, right, from the initial impulse, right, and then lost steam. Now, what does the trigger line look like, right? So, okay, just to introduce to you guys, this is the RSI line, or at least what I call the RSI line. This is the lower low, right? And then, of course, this is the, what do you call that? This is the trigger line, yeah? So, the reason why it's the trigger line because I want price to break out of that, backtest, and go up, right? So, how do you draw the trigger line? Well, generally it will look something like this. So I always look at the highs after the lows that were formed, yeah. So this is an anomaly to me. So it's somewhere like this, and then somewhere like this, like that, right? So what am I looking for? I'm looking at a potential, you know, I don't know if this is going to break now, but if let's say this does this, back tests, makes a higher high, reclaim the 50, right? Back test the 50 and go. So I already have two inherent targets, right? I got 61.27 and 61.34. And that's generally how I look at RSI divergence. Now, do I enter a trade right now? Probably not, because it would be very, very premature. My trigger line, which is the one you see above here, shall I put it in pink so it's easier to see? Which one is pink? Is this pink? I don't know. Crap. It's been yellow. Yeah, so the trigger line here, I need my trading rules for this setup in the playbook that you can get under the resource tab in Discord, is that I want this to break, right? If this doesn't break, it's no trade for me, you know. Trying to catch a long from here is pretty dangerous, because what could happen is if the bulls fail and I don't entrust my position, the fate of my position, to bulls that I've never seen in my life, yeah, you know, you could very have I mean, if the bulls lose steam, then the bears push it through, backtest and more downside, right? And then what? You get stopped out for no reason just because you wanted to make like that much more profit. That's silly, right? So yeah, you know, less profit, more confirmation makes for a more profitable day. So, in my opinion. So, we had this, and those of you who know me, we've always had this saying way back then, even with the currency trading firm, which was, I don't care to be right, I only care to be profitable. So I talk about, and what this riddle means is, like, for example, I've set up preliminary targets at 61.27 and 61.34. If I TP out at VWAP, that's perfectly fine for me. Why? Because I don't need price to hit 61.34 on the dot, right? Because then I'm more worried about being right. See, I called it 61.34 gold. I called it. Haha, I'm right. Oh, great, cool. Ego gets a very good stroke, and then I take a lot of risk. My risk manager will be so far up my ass, right? But yeah, for me, it's cool. Good rally, right? If I start to smell weakness, then I'm out, you know? If price continues to go sideways a little bit and push up from there, then, you know, that's great. It's not my problem, right? I've already clocked out the profits that I needed to clear for the day, and then tomorrow's another day. Welcome to professional trading, right? It is boring, but generally quite lucrative. So as of now, what has happened, right? On the 5-minute chart, as you can see, S&P is starting to form a bullish divergence, which is quite cool. So I'm pretty excited to see how that pans out. We have seen an EMA cross right here, right? And of course, you know, it is still very bearish. So can we make another lower low? Yeah, very, very possible. Now, how is this? Here's an important thing about setups, right? Every setup, you must be very, very clear about your invalidation. So when would this idea invalidate? Well, if I extend the RSI line, if this makes a lower low, right, and the bears push RSI low and breaks the RSI line, then this setup is over. It's premature. We'll take a look at it again if another one forms, right? So yeah, that's why I don't like to enter at the bottom, right? This is the, what did I used to call this? The trend line? I don't know. But yeah, I don't like to take trades off this line. I only take trades off the trigger line, right? So yeah, you know, clear and defined trading rules are very, very important if you want to take your trading seriously. Otherwise, it's effectively just gambling and betting on a direction. And I would suggest then a casino is quicker. Yeah, I think last time working in a firm, I used to, fun story, I used to, after a trading session, I used to go to the casino to get my fix, because, you know, everything's so, you know, when you're working in a trading firm, like everything is so rigid, because you actually have like risk managers. My risk manager for my casino is my wife. But yeah, you know, I used to go to the casino just to blow off steam after a heavy trading session. Yeah, again, all information is on the stream is for educational purposes only and does not constitute financial advice. So I'm just sharing, you know, a little bit of my experience. But yeah, you know, if we make a lower low, maintain the RSI line, we're still in play, right? Then we will get a 3-point bullish RSI divergence, maybe, and that would be cool. But trigger line stays the same, right? So what I will be doing if we form a low and bounce off this is I'll be extending my trigger line, I'll be extending my trend line, and you know, continue to look for opportunities to make that play, right? So that's fundamentally it for ES or S&P 500. Let's go to NQ. Well, NQ just saw a massive push. Now this is an EMAX waiting to happen, right? There's a beautiful EMAX waiting to happen. VWAP has been holding price under, and we just saw a solid push up. That is pretty cool on ES, but that's on the 5-minute chart. Let's go look at the hourly chart. Yep, we had one very nice gap down bullish RSI divergence from here. And NDX. Oh, this is delayed though. Yeah, my NDX is delayed, so I just use it for reference really. But yeah, it's still in a bullish trajectory. So we'll see once this trend line breaks, then you know we're gonna talk about a possible reversal, but only when that happens. Bitcoin, all right, Bitcoin. I'm still waiting for my straight 8s. I mean, if I don't take short-term positions on Bitcoin, that's what my teammates do, other colleagues on the Safehouse team. I personally don't. Long-term ones, yes, but which I call Jeff's Asian level. Because I'm Asian and he's Asian and we love 8s. So this is a running joke with the members in the community, and my promise to Jeff was, if I've talked about this stream after stream, haven't I? Yeah, if Bitcoin hits straight 8s, I'm in. You know, we came really close. I completely missed this, because that would have been a beautiful rotation up, right? But yeah, as of now, it's in a, well, I would say Bitcoin is ranging really. It was in a bearish trajectory, but it's a very decent, not crazy kind of bearish trajectory. What a lot of the traders like to do here on Safehouse is, I gotta zoom out a little bit more. Let's go to the 4-hourly. Yeah, there we go. So if you look at it from a higher time frame perspective, right, ignore all the other razzle dazzle jazz. Let me just delete all this. This yellow line is the 100K mark. So now we're sub 100K. Yeah, they like to pull the FRVPs, or fixed range volume profiles. As you can see, we're within range here. So start of range, end of range. There we are. Right, so value area high, value area low, and point of control. Point of control right now on my Bybit chart on the 4-hourly is at 96,900. And as you can see here, you know, this is the volume profile, so there's a lot of volume in this zone, right? And of course, you've got value area high up just slightly above 100K, and then you have value area low, sorry, very close to the 92,230, which is a long-standing level that I've worked with. As you can see here, numerous times, you know, the bulls are really active in this zone, right? Sell pressure is on, as you can see. What do you call that? The bears pushing the price of Bitcoin. Even did a full rotation here. Full rotation, man. Christ, that is wild. That was what, over a Sunday? Saturday, over the weekend, push down into Monday, push up. Wow, that is pretty wild. Was that this week? No, that was start of the month, right? And of course, it's been pretty sideways. We just backtested, Bitcoin just backtested value area low, right? And yeah, it's looking to try and flip this around, but it's gotta take out 96,900 for that to happen. What level is this? Oh, this is a level. Oh wow, resistance here. All right, yeah, so we've got some local levels to work with previously, but that's generally the news, right? Like if price can flip 96,900, which is lining up perfectly with the 4-hourly FRVP, then backtest it with strength and go and make another push to take out 100k, because 100k seems to be getting further and further day by day, right? Of course, there is plenty of resistance at value area high, and what I would suggest is just take it one level at a time, right? One target at a time. Yeah, but Bitcoin is generally just ranging at this moment, right? And so it's not about trying to call and being right about which direction it's going to come out of, right? But to take the moves one step at a time, right? And let the market tell you what to do. You know what I mean? Don't try to tell the market what to do. So yeah, right now we bounced off value area low. Why doesn't it show values? Values. Where are my values? Boy. Okay. Why can't I see values? Is that not it? Inputs, coordinates. I don't know. Anyway, I'll just read it off. 93,300 value area low, and 101,512 value area high. POC right on 96,900 is what I'm currently looking at. So yeah, value area low has been holding very decently, right? Of course, there's 92230 as the zone, the support zone that I'm looking at. So now the question is, will we reject off POC 96,900, or will we claim it with strength and push to the upside? That's all that matters, right? It just depends on who's got more vigor, who wins today's trading session, the bulls or the bears. So we'll watch it as it unfolds, yeah? But yeah, that's primarily it for Bitcoin. Just take a quick look at the VIX. Volatility index is decently low at 17.23, right? When the market starts to swing, that's when it spikes up, right? Usually like during CPI or NFP or one of those types, you would see a spike like this. Here there was a 22.53% spike here recently. I think this was, I can't remember what this was. I'm gonna go check. But yeah, this other one was about 18.37. Right now it's very, very soft, and this is what I call normal state. So yeah, VIX is looking pretty decent. So yeah, those are the major wow, it's already been an hour. But yeah, those are the major assets that I'm looking at. Euro recap, right? Still in the range. May potentially see a bullish RSI divergence unless EMA is on a higher time frame, starting to cross, and then we have that Emax crossover, bulls lose steam, and then we see a range rotation down to 102.72. So that's potentially what I'm looking at, right? If the bulls hold 104.28, then potentially we can go and try and take out 104.92 once more. That's Euro. Gold. Over on gold, we're still rallying, right? Still rallying. And of course, more immediately we are within range with 29.42 and 28.86, right?